Now, on the back of the disappointing inflation read and strength in the US dollar, copper finished lower overnight. Investors instead seeking safer havens. Base metals and crude hit hardest on news that inflation in May rose by the fastest rate in 3 years. And as well, the manufacturing regional gauge showed a contraction in the month, and that conspired to weigh on markets. Got more with Larry Shover from Efficient Capital Management in Chicago.
It's unbelievable. You know, the Chinese are unbelievable copper traders right now. The fact of the matter is imports have increased quite a bit. Right now, the Chinese manufacturers, remanufacturers are living on a hand-to-mouth basis, keeping the bonded warehouse supply high right now. So it's like a little bit of a smoke and mirrors game right now. You'd think copper would have retreated quite a bit, but at the end of the day, on the copper market, on the physical side, it seems like the Chinese are sellers of copper and buyers hoping for a $4 price. They're a lot happier to be buyers. The long-term trend of copper going higher is in place, but right now it's just a choppy consolidation mode.
Is there anything to take from the world's largest commodity trader Glencore's view that indeed Chinese demand is slowing? Is that likely to be a short-term view, or you think there's more to it than that?
I do. I think, like you, it's a short-term view. Let's face it, China is 38% of all copper production, importation in the world. It's a huge figure, but there are other countries out there who are growing and growing quite well. So my view is copper's funds are selling copper. They're looking for a $4 price in New York. And that's when China seems to come in and buy it. It seems like they're going to have to buy it along with the rest of the world.
Tell me about the US dollar. You're saying it could hurt copper's direction in the short term, but again, fundamentally, there are other factors that will see the price action remaining intact.
Absolutely. Like today, the U.S. dollar seemed to be the safe haven of all assets. Gold didn't do a whole lot of anything to help us, but the U.S. dollar did rally against all currencies across the board. But with that said, I think the bigger picture, the dollar could help the copper price. It could hurt the copper price. But we all know that Chinese buying is going to be the key factor on copper prices in the next 6 months.
We all know that gold has that intrinsic value that other commodities arguably lack. Tell me about its action in the session, because despite that strength in the greenback, it wasn't the case that it crumbled. It held on to its gains quite well.
It did, and you know, right now gold doesn't seem to be the ultimate safe haven, which is acting like a technical metal right now. It was up maybe $6 during the day, which is much better than most metals, but the fact remains that gold is the casual driver of global liquidity, of which 1/3 of that is the Fed's balance sheet. The remaining balance is global government borrowing. If you believe that global government borrowing is going to remain in place as well as U.S., gold right now is in a corrective stage. Is going to continue to rally.
Yeah, let's just talk about some levels. You're saying there could be resistance at around the 1550, 55 mark. So what would push it into the next sweet spot beyond that?
Yeah, you know, the big sweet spot actually is 1475. It seems to be a lot of demand support right there, where we have central banks in Mexico, et cetera, having big buyers of gold at that level. And it seems like with the 200-day moving average being broken, that's maybe where we'll see it. 1485, 1475, see a lot of demand support at that level.
Let's switch into some of the softs. You're eyeing the corn crop, maize, and a pretty alarming takeout on, again, China and price action internally versus what you're able to produce.
Absolutely, and I know that Australians do care about corn. The fact remains that the focus on corn, no matter what happened today, the focus is supply-oriented. We have China, where right now, U.S. New delivery landed corn is cheaper for the Chinese than the $9 a bushel that they have to pay for their own cash crop. On the other hand, you have our United States ethanol subsidy, which failed yesterday in the Senate. At what price point will the government changes policy on subsidy. And then you have the U.S. weather problem. Right now, the USDA has said that our balance sheet is very, very tight. The weather in the U.S. has to be exceptionally perfect for our crop to remain at the levels that they're projecting. So with that said, I can't see corn in the long term going much lower. I mean, think of it this way. 20 years ago, there was virtually no importation of vegetable oil in China, and that has grown sixfold since 1985. So long-term copper is not a convergence trend. It's a divergence trend. It's moving from the mean.
Just tell me about that vote that fell over. You talk about government subsidies, that went through and yet it didn't manage to pass muster. Why is that significant?
Well, the government subsidy on ethanol did not get approved last night. Actually, it was defeated overwhelmingly. So basically, it's taking 38% of our corn crop off the market, and you have to think, at what point in corn prices will the government be forced to do the right thing and reduce or eliminate that subsidy? Because at the end of the day, people do have to eat, and at what price point will corn be subsidized with wheat or some other commodity to help feed the world?